Yo, 365, shake my hand and welcome to another video, another analysis on assets. My last video was, of course, on pound CAD. I hope you enjoyed that. I hope you kind of like understood where I was going with this. And today we will be looking at the pound Swiss franc. Geez, you know me, like I generally always overshoot. I genuinely thought we'll be done with all this work by the time May comes, but I do remember saying in multiple videos by the second week of May I hope to be done. But I'm realizing today is the 4th of May, and I took a two-day break. I had to travel to one of my trading floors back in Grahamstown because we left Grahamstown and I stayed there. Catching up with a couple of things and trying to see if we should move the whole team out and all that kind of stuff. So I was 2 days out. I haven't recorded anything in about 2-3 days, and I'm now worried that I might not be able to keep my promise that I should be done with asset by asset analysis by say 14th May, which is the second week of May, because we're only on asset number 31. Right, so it feels like I should be doing about 4 or 5 assets per day, just to then complete this task ahead, right? So just pray for me for strength and time. Yeah, so all I need is time. But yeah, don't forget, we've been really putting in the work. There are a lot of these beautiful long-term analysis. Long-term means just because you didn't watch it when it came out doesn't mean it's useless information. It's actually very important to see what I say 2 weeks ago and see where you are relative to where price is, because I am mapping out trades for 2023, which is the whole year, right? So we've got pound Swiss franc here in front of us. I can see I've done a little bit of plotting on this chart, but I'm pretty sure I don't have a single swing trade growth in my war room trading account, in my professional trading account. I'm not in any positions here. So let's refresh and reset and kind of like have a look at price. Right, so I've got a Sasco here, and the Sasco chart is always a better chart for this kind of thing. I'm just going to go right at the very beginning of time on this chart. Right, as usual, one candlestick represents 12 years, sorry, 12 months, right? So this is quite a big deal. I'm just going to remove any annotations, any notes, probably using this chart to teach a while back. Right, so let's view this thing. Right, so this is obviously a sell profile asset. I know there's a lot about my pound pairs, and we've got data from about 1986, 365 Trading Academy students. Back test, back test, back test, back test, back test everything I say, please. Long wicks will always get filled. Long wicks get filled. Long wicks get filled, right? Markets move in that direction for a reason, right? And then in terms of immediate areas of values that are going to affect us in the long run, we've got this weird border here to the upside, right? So this supply's job is to ensure sell pressure continues, put in 2010, right, into that whole 2020 thing. Banks think in 3 years, take profits in 3 months, take profits in 1 year, in a 10-year span, right? And that's just how it is. There we go. Another supply put in place in 1990, 1991 supply. You can see there, 1990, right? Final push, 1991, 92. And markets have been moving accordingly. In the year 2000, you had a new order block. 10 years later, bullish engulfing order block, push price into the supply zone. Price sold off. That's year 2000. 10 years later, year 2010, we've got a new supply. And in 2020, come on, man. Come on, man. Come on, man. Listen. If I can repeat something over and over again and the markets keep doing it over and over again, it is very logical to assume what needs to happen then is to master this dance, this repetitive dance, so I can make money from it. That is all. You need 365 days, which is a year, to fully commit. You start off by hitting the link down below, taking our 8-week course, module 1, module 2. Generally speaking, that's all you need, right? And then you need to really focus and zone in on those rules that I break down in that series of lectures. It's about 66 learning hours, and you'll get to see this happen all the time, right? So, according to the powers that be, when we look at pound Swiss franc, every 10 years a 12-month supply is created and price falls, right? Falls, just falls. There'll be zigzags on the daily, weekly, monthly, H4, H1, but the trend is down, full stop, all right? The supply that's created, when created, needs to get retested. The supply that's created, when created, needs to get retested. The supply that's created, when created, will need to get retested. And that's where the tricky part of trading these things become, right? Because all of a sudden you're going down, and then markets reverse on you, and then they go down, and then markets reverse on you, and now you're gonna go down, and then markets at some point reverse on you. This is long term. We don't have to worry about this today, but it's something to bear in mind. Right, there's nothing I'm looking for. I'm not even looking for a demand on the 12-month chart. On the 3-month time frame, we call this our presidential chart, because it has some reasonable influence, right? So don't forget, this zone is the zone we said markets put in places that markets never go up. It was the final supply that pretty much set everybody straight, right, on in the year early 2010 vibes, right? So this is that supply here. You can see it breaks structure, it does all sorts of cool things that we need to see in smart money concepts, and then price goes down, right? So we really are concerned only about all the zones we are going to find below this red line I've drawn, right? That's all we are worried about right now. So we're going to start to tighten up our zones as we see them. Complicated 365 candlesticks, fails to engulf, full engulfment, equalizes, new engulfment, touches it there. And that's what I want to focus on, right? So I'm going to draw this supply like this, and then markets come back, leave, come back, leave, and then markets drop. Bearish engulfment there that I noticed, but I'm going to ignore it for now. And then obviously this one, the 2020 governing 12-month chart, you can see in 2021, that's when the big imbalance happens. But if you look to the left, and I hope I'm not going too fast for you. Trust me, I'm much more slower in my lecture videos, so hit that link down below. Right, if I draw it like this, then I see that, oh, okay, fine, there was this in 2020. You see there, 3 months chart, 2020, January 2020, the very first financial quarter of the year when COVID gets announced. Markets create a bearish engulfing, markets come back and do a nice retest, clean retest. Markets really move crazy to the downside. Markets break structure, and then the first financial quarter of 2023 was a green candle, and right now we're seeing red. We don't know how this candlestick will close because it's the month of May, and the second financial quarter on the 3-month chart, it's April, May, June. But one wonders if this is not going to be a clean bearish engulfing pattern. One wonders if we're not literally watching price in our eyes right now create a new 3-month supply, right? One wonders. You can always wonder, right? Yes, this could be a sideways movement before price goes up. Yes, you could make that argument. Right now, we'll only know by end of the financial quarter, end of June. But one wonders. Well, let's get clarity on the governing time frame to see what's cooking here. Right, so on the governing time frame, we've got that downward pressure that we saw on the 3-month supply. We've got multiple continuation patterns. That's a supply on the governing time frame. Markets come in here. I'm gonna quickly tidy up these zones, right? Just take what I want, what's relevant for my eyes right now, and I feel like zoning in here. All of this is a bigger supply, right? But I'm saying I feel like zoning into that area there on the monthly time frame just to triple check something. Right, Alvin, shame. I'm gonna respond on chat because I saw on the public Telegram group you wrote. I didn't read a bearish engulfing candle properly. Thank you for that. I just am not sure which asset you're referring to there. I don't know if you're gonna watch this, but I'll make an effort to respond on the group as well, so you see it. So I can be. I love being corrected. I love when people pay attention. I appreciate that. Right, so we've got a bearish engulfing pattern, price makes contact, bearish engulfing pattern, price makes contact, price drops, right? So this is now, last year. This is a year ago, February 2022, March 2022, April 2022, another supply is created, right? That markets flow from the month of May, right? And this is where we are now, a year later, all the way down here, all right? Now we can see I drew this yellow yellow zone rather, but we said we don't know until price is done forming that 3-month supply. But what we can see definitely is the fact that there is a weird weakish engulfment here. Markets don't open below the red candlestick, but definitely close above. Some people find that as an engulfment, some people don't. I don't like them. I like clear engulfments, but for the most part, markets right now are feeling a weak. Right, this is not, if this was a demand, it's still not a type of demand you want to risk your money on. All right, there's nothing about this chart that screams buy at the moment, and this demand looks terrible. Right, there are no real supplies at play right now in this area as well, so you can't exactly say this is a complicated 365 candles and markets are going to give us an imbalance. Right, so the governing time frame is really right now a bit elusively weak and annoying. Right, well, what I can give you though is the fact that every time you see these long wicks in price, every time you see them, right, these massive rejections, price will come back and fill them all the time. Price will come back and fill these wicks. Right, so when you get these long wicks, markets have to fill them, and you have another long wick here. Right, so this could happen, one of these two, but markets have to fill that wick, and my bias is obviously towards the downside. On the weekly time frame, I'm hoping for clarity in this cluster right now. And that's why I always tell you, if you see a chart that's not giving you clean entries, move on. There's so much money elsewhere, right? Find the 30% of those charts that are really doing a good job in trending, not ranging markets, right? On the weekly time frame, very obvious weekly supply, slightly low on the curve. That's the main reason why markets are where they are. Low on the curve supply would mean you're selling a little bit low, which might mean it also doesn't have the type of power and pressure to push price, down properly, right? And so we're waiting to see. But on the weekly time frame, we can see a much more clearer defined demand, right? And it's not really an alignment with much, right? There's no governing demand, let alone a 3 months or 1 year demand, right? So it's just a weekly demand, and that's what's kindly been holding price down. There was one here, but eventually it broke and markets came up. On the weekly time frame, this would be a much more immediate supply, something like that. All right, if you're with me, you feel me, you can see it right there. It's just not, this is just, I guess, because we have to do an asset. I'm not excited. I am less excited about pound Swiss franc, and I thought I was less excited about pound CAD earlier on, but it's actually pound Swiss franc that's not giving me the best outlook. Right, you can see here failed engulfment, nothing really, no decision here. On the daily time frame, okay, this is what price we're going for that weekly chart. I'm just tightening my zones to see better, right? Price fails to get there, price makes a fresh touch, price makes a retest, markets get rejected, daily demand on top of weekly demand at least, right? Daily demand on top of weekly demand is a very good area to take 1 or 2 or 3 bounces. Normally we want 2, but 3 because the list is quite nested, right? But even the third one is a risk, so you have to accept that risk. But you got 1, 2, and now 3, right? So the price is most likely to go down, right? And then on the daily time frame, you see it happening again, right? So markets building a nice sequence of lower highs, right? Remember, the sentiment or the structure is leaning towards bears. So if you had sold, sometime last week or the last week of April, etc., then this would have been good money, and you should have taken profits literally yesterday, right? So where's price going right now? We don't really have a clear, area of value in mind. On the daily time frame, markets made contact with the demand right there, as you can see, and then they went back down. There's a bearish engulfing pattern. So when you're thinking about fresh touches, you want to see something now come like this, and then something like that, right? Maybe that might play out where they sweep this area here, or they go for some local lows, something like that, right? If this area makes sense to you, then take the trade. It's that simple. If it doesn't make sense to you, then wait for something much more clear, right? But that's literally what you're looking at right now, and it might typically work out. Right, if you go for those low equal lows, that's 1:3.25. If you go for just the standard demand turn off, that's 1:2 and a bit, which is still, money, right? Nonetheless, as soon as you can lock profits or break even, you'll do just that. And then in terms of where prices going long term, right now on the weekly time frame, that's the chart to look at week after week. We want to see clear direction. Either we're breaking out of this sideways moves to the upside, or we're breaking down. If we're breaking to the upside, then we want the better supplies. If we're breaking down, then we want to negotiate daily supply to daily demand until all the daily demands are removed. I repeat, if we're going down, we don't want to hold blindly. We want to see daily demands being removed one by one. So you take profit every time you get to a daily demand. You let price then do the work, retrace to a valid supply, and then you let price get to a daily demand. It does the work, you come out, etc., until this chart is done. Right? I hope you learned something. I hope that helped you. I'll see you in the next video. 365. Peace.